Much readiness.
All right, we're live. Welcome back to another exciting edition of BSing with the Bear and Jamie. I'm the Bear, and welcome to
I'm
our we
I'm
and,
Jamie.
and you're Jamie. We usually Jamie has a nice beverage with him to start off the show, and I don't think today is an exception to that. What are you drinking today?
Well, today, Mr. Bear, we have a Jura. I think it's the same as what I had last week, actually. It's the only one I have left. The Talisker went down the drain. Drain meaning my mouth. I would never abuse whiskey in that manner. And I'll have a few of these and we'll see how we get on. But can't complain, sir. How's your week been? You been good?
Ooh, I was on mute. Okay, so I've got this weird thing where I have to mute my microphone while you talk, otherwise it sounds like there's background noise. So I'm
Oh,
gonna be
okay.
like DJ here. I'm getting a real microphone soon because I started recording videos for YouTube, and it seems like this Bose headset's microphone is a piece of shit. I actually had to get an adapter just so that I could use the microphone and the headset at the same time. So instead of calling in on
Jeez.
my phone and using my phone for the audio and my computer for the video, now I have a splitter for my sound card where I can plug in my Bose headset and not call in through my phone. But I don't know. The headset's quality's not good enough. Long story short, I'm going to get a real microphone and pretend to be like a real streamer or something. I don't know. But anyway, welcome everyone. Thanks for joining. I am not drinking a whiskey as usual. It seems I got shit to do after this is over. Otherwise, I'd be joining you. But I am drinking an iced chai latte, which is like my new favorite drink. I love chai lattes. They're freaking amazing. The spice mixtures from each place, you can get a different flavor out of each
What
restaurant depending on who makes it.
what is it? What is a chai latte? Please tell me.
Well, chai tea, you know what a chai tea is? As an Englishman, you should know what chai tea is.
No, as an Englishman, it's called an English breakfast tea. It's a traditional British tea, sir. Why would we have a chai tea? Unbelievable behavior.
Well, it turns out historically you may have had a demographic that came and brought you this tea. I believe it is of Indian origin. It is, I think it's a mix of black tea with cardamom and cloves and a couple of other spices that are put into it. And there's different ways of preparing it. I won't get into the details, but it's delicious. They add milk to it, kind of like your traditional English breakfast tea, but it's got a little bit of a zing to it. It tickles the tongue. I'd highly recommend it if you ever see it. You got to try it at least once.
I will. I fine. Yeah, I'll try it. But yeah, no. I mean, a tea's a tea, isn't it? It's a
Yeah,
brew. It's what we call it, a brew. I'm not annoyed. I'm not annoyed. It's just, if you can have a tea, just have a tea.
I hear you. I hear you. That's hilarious. All right, why don't we jump in and do our disclaimer and get the show on the road?
Okay, sir. Sorry, I was munching on some food. Right, this is not financial advice, if you haven't gathered already. This presentation is for information and educational purposes only. The material provided should not be interpreted as investment advice, an endorsement of any stocks, ETFs, futures, options, currencies, and cryptocurrencies, or an offer to buy, sell, hodl, or trade stocks, ETFs, futures, options, currencies, cryptocurrencies, and leprechauns.
Leprechauns, that's my
No,
favorite part.
leprechaun. Hash of hash. No liability is accepted for any loss, whether direct, indirect, or consequential, from any use of information on this presentation. And then the last sentence, that's your homework. People can, I'm pretty sure people can read. They're pretty good. So that's about it, mate. Yeah. How shall we do this? Would you like to have a look first and I'll carry on drinking my whiskey? Or would you like me to go over what I've been looking at within this, as you like to say, stonks? Why is it stonks, by the way? Could you tell me? I don't understand what this stonks thing is.
I think it started off on Reddit, where there's
Oh, right, okay.
there's a subreddit called um, Wall Street bets, and they all call themselves autistic because they think they're either terrible traders or amazing traders. I'm not sure which one, but evidently, spelling stocks with an N makes it seem a little more edgy, and I think they're going for a certain word that I'm not going to mention, but I think it's like a running joke that they're all challenged in some way, and it's a miracle that they make money, but it's because they're autistic that they make money. That's just how they say it. I mean, it is what it is.
An incredible deep meaning. I would never expect anything less from Reddit.
Sorry, I wish it was more exciting, but I actually should look up the specific definition just so next time someone asks me what it means, I don't completely botch it like I just did. But anyway, I'm happy to go first if you want me to.
Make it mental.
Or if you'd
go ahead, I don't mind.
You want me to do it? All right, so
do it.
I'll do it while you drink your whiskey.
Thank you. Go ahead. You have the floor.
Where do we even start? So last week was Friday. We left off, and things had just finished dumping the day before on Thursday, where news of the second wave of the coronavirus was coming out, and things didn't look so hot. When you looked at some of the numbers under the hood, the 10-year started to go out of control, and the yield curve was getting screwed up. But what eventually happened here, I'm not even sharing my screen. Hang on a second. There we go. Let me just, cool, it's on YouTube. Maybe we'll actually have a seamless transition this time as opposed to last time. Okay, so where are we today? Well, it looks like we've done a whole lot of backfilling since last week. We left behind this gap on the S&P chart from Thursday as we gapped down. And now we're just trying to fill that in. And like I said, it's just a whole lot of nothing. And the reason for that is you've got quad witching today, meaning a whole bunch of options contracts are rolling over their quarterlies. You've got all that stuff coming off the dealer's books. So theoretically, we should have been pinned in this area really from about 305 to about 310. And that seems to be where we're at right now. I wouldn't expect anything crazy to happen until all this stuff runs off. If you guys, there's a guy named Charlie McElligott. This guy works for Nomura, and this guy's got a crazy picture. This is him. He runs this thing called the CTA model, which is a model which determines where most of the algorithmic trading would either flip long or short based on their gamma exposure. Now, it's really hard to get this guy's letter, but sometimes Zero Hedge will publish it, and it looks kind of like this. This isn't today's by any means. Actually, this is not the CTA model. But anyway, he'll talk about this on Macro Voices, and if you can get someone who interviews him, he'll actually give them his letter for that day, and you can get a decent idea of where the gamma flips are. So what that basically means is, for instance, on the S&P, I think earlier in the week, the gamma flip was just below 300 on the S&P, and that would mean everyone would flip net short. All the CTs would flip net short, and it would force dealers to start chasing after negative gamma, and therefore it would sort of have this positive feedback loop where the market just continues carrying itself down as the dealers continue to hedge themselves to the downside and acquiring and hedging their short positions. The same thing happened back here when the CTAs flipped net long. Now, some may say that this was because the dealers were buying. Some say it's because of the RobinHoodies that were buying all those crazy names from the Hertz to the Chesapeakes to any of these in the top 100. This is a cool site that I use. I'm getting off topic, but I swear I'll get back to it. This is called robintrack.net. This is a college student who programmed this to scrape data off of Robinhood to see what the most popular stocks being traded were on that platform. And you can see he ranks these. So right now, the number one is Ford. What's that? You just needed us to hear that, didn't you?
Maybe.
That was Jamie peeing. not actually whiskey going into his glass. Is that right?
I have a baby's bladder.
Anyway, so this is a great tool here to see what are the most popular stocks on Robinhood that basically, and this goes back to that Reddit thing explaining stonks, is a bunch of these guys figured out that if you can get enough traders, retail traders, to buy any of these names, not necessarily these, but any security, that they can force the dealers to buy the stocks if they're buying, the retail traders buy out of the money calls. Because what happens is the dealers have to buy the stock itself to hedge the call that they sold to that retail investor. So it's this other feedback loop that pushes these names higher, because not only is the retail trader buying, but by buying those out of the money calls, it forces the dealer to also buy the underlying stock, and therefore it's forcing these names up. It's actually a fascinating phenomenon that's kind of happening right now. And you know, the best way of getting on board any of these is to just look at the most popular Reddit threads. I mean, if you go to something like Reddit /r Wall Street Bets, you can go and check out some of the top names, top threads, and people will talk about things like, you know, withdraw your, you know, usually you don't get good advice like withdraw your goddamn gains, but things like, like you get funny videos like this. You got Jay Powell and the Dow Jones Industrial continuing up 17,000, 18,000. Oh man.
That's amazing.
And then down. I mean, dude, before I go to bed, sometimes I just scroll through this thing just to get a nice chuckle before I collapse into a stupor of sleep. But a couple of other things will pop up here. Nothing good showing up right now. Maybe some Tesla. Look, they're buying way out of the money Tesla calls, 1885. There's 79 comments on it. Usually you want to look for the ones that have a ton of people commenting on them. So I think Tesla's trading at like $1,000 right now. Yeah, and they're buying $1,885 calls. I mean, it's crazy, right? Like if you've ever learned to trade options and you have an understanding of the different strategies, buying calls from where the price is right now at $1,800, and even if you have a technical background, right, and especially on a stock like Tesla, for this thing to go to $1,800 and buy calls like that, I mean, I don't even know how much those are. It'd be funny just to take a look. I promise we'll actually get into some meat and potatoes here. So what did this guy have? The 821 calls. So 821, 1885. Give me a break. All right, so 1885 calls. That's absurd. Those things are bid 715 right now. So if the price doubled, I mean, like, what the fuck? These should be priced at pennies on the dollar, but they're not. That's just the craziness with Tesla right now. Okay, anyway. Isn't that, I mean, you don't trade options much, do you, Jamie?
Well, I wouldn't do an out of the money calls and hoping that the market cap was going to double. No.
Should we add one? Should we add one to the paper trading account just for shits and giggles?
It'll probably just end up working, to be honest. How far out can you? How far out can you go? What's the longest expiry date you can have?
Looks like we've got June 2022.
Take it.
Take it. I bet those are probably priced at like. Oh my god! Look at this. The $1,800 calls are $170.
What?
Yeah.
Jesus.
That's incredible. All right, that's Tesla for you. I mean, okay, so let's get back into the thick of things. So what am I looking at? Well, I still have my Ford short. I mean, technically puts. I am looking for this thing to break to new lows, but keep in mind that if I'm expecting anything to break to, not new lows down here, but since last week's dump, if I'm expecting any name here to break below Thursday's lows, what I'm really looking for is the S&P to break to new lows. Now, the problem that I have with that, and actually Ford looks much weaker than the S&P, we're heading into summer months. Sure, we're seeing a lot of negative data from around the country in the US about COVID cases increasing, and we're seeing the unemployment figures that came out earlier this week that were worse than expected. Like, it's just one thing after another is bad news is going to continue to hit. But I don't think the real risk to this market are numbers like that. I think the real risk to this market is something that most people aren't paying attention to. It's going to not be like, a COVID headline or an unemployment headline. I think it's going to be, and I don't know if I've talked about this yet, but I may have, because there was an article that I read about credit card defaults. And in August, a lot of these credit card companies have to start reporting their defaults versus deferments, whereas right now they're reporting deferments and there are very few defaults. Because, for instance, let's say that I had a company with a credit card of $1 million due on it. I could actually defer that payment for 3 months, and even if I don't have the money, I still don't have to pay it for another 3 months. Once that deferment period comes up, they're going to ask me to make a payment. Now, whatever that minimum payment may be, or maybe I have to pay the whole thing off. If I can't do that, then I get marked as being in default. And when credit card companies report their defaults, I think that's going to be a cascading failure. A lot of these companies are currently enjoying this deferment period, and once that comes off, you're going to see a cascade of these defaults hitting people's balance sheets, banks, credit cards, whatever, whether that's mortgages, whether that's credit cards, business loans, you think of it, whatever it can be, if that changes to a default, which usually there are defaults, like every month you see some percentage of open accounts defaulting. And right now it's even lower than that usually is. And the reason for that is everybody is deferring their payments. I think that's the systemic risk that we're going to be looking at, is a lot of these banks that would usually use, say, leftover cash for stock buybacks. That money is going to be used to help kind of offset the defaults that are rolling off their book. They got to finance that somehow. It doesn't just magically disappear. And I think that's going to be one of the catalysts at the end of August, maybe into the beginning of September, that's going to set this thing off. I don't really think we're going to get this massive sell-off in the summertime. I think too many people are just kind of like off on vacation. The big money are just like, let's keep things kind of where they are, reposition a little bit. But I think the main rebalancing is going to start in August to September, just because of that, default rate and the number of businesses and even personal accounts that are going to lead to that. So from a fundamental perspective, that's my timing. Now, technically speaking, this thing looks like it wants to go down, but there's so much money being pumped into these markets, whether that's directly through the Fed, whether that's through companies doing stock buybacks, like we found out. I think the airlines were still doing stock buybacks even though they got bailed out. That's infuriating. Yeah, I mean, look, and now you've got news coming out that Apple's closing its stores. So let's take a look at Apple. I mean, they're debuting their iPhone 12 in a couple months, right? I mean,
online.
Yeah, online. But really, a lot of these stocks are just, I mean, the NASDAQ has continued to make new highs, right? The NASDAQ every day is just powering higher and higher. This is just insane. So a lot of the companies that are in the NASDAQ, I think, are benefiting greatly from this online business. You've got your Zooms, you've got your, Amazons, your Google, all the ones that basically the top, I guess it's FANG. I don't even know. How's Facebook doing? I mean, this looks like crap, actually. Facebook's been trying to avoid getting into this Twitter scuffle with the president, but boy, this thing looks like, I mean, what is Facebook even doing right now to earn revenues? I still don't understand why this thing is worth anything, but this to me looks like a distribution that, I mean, by all intents and purposes should have sold off during that NASDAQ sell-off, but the fact that this hasn't yet makes me very cautious. So here's the problem that I have is that next week, because this quad witching is happening today and all these positions are rolling off, it kind of frees up the market to do whatever it wants. Does it want to dump, or does it want to go up, or does it want to go sideways? I'm of the conviction that the market's going to go sideways. I don't actually think we're going to get a meaningful enough dump on the S&P or even the NASDAQ. I mean, sure, we got this, from a technical perspective, what should have happened is we should have at least tested 38.2. We tested that 23.6. I think in this market, we've seen a lot of 23.6 testing and then bouncing back higher. I am very interested to see how that plays out next week after all this rolls off. I mean, I really wanted to see this gap filled up here at 3,300 on the S&P. I think we could still get there, whether that's next week or before August, September. I think that's going to be filled in. I think that gap needs to be filled in. All the technical traders are looking at it. And plus, I mean, look at the sell volumes. We got really big sell volume in the last couple, Thursday, Friday, but today's volume, sure, we got another hour and a half left. And it's not as big as we did, as we got on Thursday, but not really the amount that I'd like to see, the amount of volume coming in. It sure has poked up. So let's see what happens next week. But again, I'm of the conviction that this thing just kind of trades all into the sideways, sideways into June and into July. We'll see. I have positions on, but I think we actually have one in the paper trading account that's going to expire today. Yeah, this SPY position was just a massive loss. This is the 275 puts. I never messed with this. So this is just going to come down, roll off the account as a big loss. We seem to be doing very well on this SLV position. That's trading at 1641. Starbucks, that should be rolling off next month. I really wanted to see Starbucks sell off. Okay, before I go into the specific positions, let me just talk VIX again. I know last week I placed orders to go long the VIX. I don't think I got filled on those. It doesn't look like I did. Okay, so if things are going to go sideways, then you would assume that the VIX is going to trail lower. I mean, the VIX is doing exactly what I think it should. Mike E. Hey, Mr. Bear, you could try a piece of noise cancellation software by NVIDIA RTX Voice. I don't think you need an NVIDIA card to use it. It does noise cancellation on the mic input and speaker. Oh, okay. I actually did hear about that. Thanks for the input. How does my audio sound right now? Is it like echoey and crummy?
It doesn't sound too bad, to be fair. It's good enough.
Okay. All right. Then let's continue. So the VIX is kind of doing what I'd expect it to do, but you kind of have to ask yourself, if you think that the market is going to sell off into next week, things are going to get worse from a news perspective, let's say, not just Google or not just Facebook, not just Apple decides to close its stores, but say a whole bunch of other retails and, they continue to come out and say, we're going to do the same thing as Apple and we're going to close our stores. Is that going to cause more of a sell-off than would already have been priced into retailers doing poorly through this whole crisis? I mean, look, you pick any fundamental news driver to push the market down. The question is, do you believe the market is going to go down? And if you do, how do you want to take advantage of either the S&P going down or volatility expanding? And there's actually this really cool strategy that I learned about from Macro Voices, probably on the S&P is what it was. They call it the ratio call spread. There was a guy named Tian Yang who, back when the S&P was trading in, I believe it was September, October of 2019, what he did was he sold some way out of the money calls and also bought some way out of the money calls. So he was able to essentially finance his long position in the S&P by doing this ratio call spread, meaning that he sold calls that were relatively close. So he sold calls that were relatively close to where the market was, knowing fully that those calls would eventually go against him, but the money that he would make on the way out of the money call that was bought, he would make up that difference. So essentially, you could apply the same thing. Now that probably was not explained too well by me, so let me use an example. So we could do the same thing on the VIX right now. What we could do is, say for example, we sold the 30, I don't know, call it if we can sell the $33 call, and then buy, let me move this up to $33 call, and then we're going to buy, let's say, some out of the money call. Like, we're expecting the sell-off, we're expecting volatility to spike. Let's say we buy the, let's go with the $43 call. Let's make it a $10 spread. $43 call, so I'm going to turn this green just so that this makes it easier to see. And then let's go to our paper trading platform, which I think, yeah, we can do this. So VIX. I would be looking to buy us a couple months of time. Now, the key thing that you want to learn about the ratio call spread is that you do not want to be holding this thing close to expiration, because you will get assigned and you will cry yourself to sleep every night. This is a really dangerous play if you're not giving yourself enough time on the expiration. So realistically, I'd like to play this into October. Just because that'll give us enough time to see if, stocks do sell off in their normal time frame, which is the September-October months. Then we could capitalize on this pretty nicely. So we can actually only get the 32.5 calls on here. So let me just change this to 32.5. Now this is the real cool part about this whole thing, is that if I sell 132.5 and buy a 42.5. Okay, so this isn't exactly 2-to-1. So this is going to be a slight debit. But what I would have liked to have seen was, say, sell the $32.5 calls, make this $8, and then buy the $45 calls. Then you would basically be able to buy 2 call options and sell one of the 32.5s if it was $8, and therefore you would have a free position, as close to risk-free as you, not risk-free, but just a free position, right? You don't have to pay anything for it. And if it doesn't work out, or say this, this thing ends up dumping, you end up keeping the credit that you received from selling that $32.5 call at $8 in October. But if it does work out and the VIX spikes to some crazy number, then you'll end up making more money on this call than you would end up losing on selling the call. So it's a cool way of putting the trade on. The problem is right now is that we're not getting the price necessary. So you'd probably have to do something like, say, sell the $30 call. Come on, single 30, and then buy the, we're going to pick up what, $8.50 on this, so we could theoretically pay $4.25. I mean, that sucks, right? To go out to 45, you could get a net credit on this, or we could just do the 42.5s and bid $4.25, but we're not going to get filled. So this is a wide spread. You really need this thing to expand. So let's just try the 45, buy this. Let me do, this isn't going to let me do the spread. Okay, so I need to buy single 10 of these, and then, this is why. All right, so we're going to buy the $45 calls at $3.90. And then we're going to sell 10 of these $30 calls. Oh no, so we need to mess with the number, right? So we're going to sell one call. Okay, we're going to do 2 of these, and then need to edit this. Why is this not letting me? Oh, it's because it's a vertical. Here we go. Okay, so then we sell one call at $30, and then we buy 2 of these calls at the 45 strike, and then the 45 strike we can pay 390. We're selling that. Okay, so you'll see here that I'm getting a credit of 390 bucks minus the trading fees. You can see the max profit is infinite. The max loss is defined at $1,100. Assuming you don't hold this thing to expiration, you get really, really crushed again into the month that this expires. You don't want to hold this into October because you run the risk of being assigned your position, and that just sucks depending on where the market is. Just don't do it. All right, so send this, and then hopefully we got filled, and we did not. Paper trading account, come on. Hopefully it'll fill, but either way. So the other thing that I could do, and I don't have this logged in right now, maybe we'll have to have an options simulator for next week. Oh wait, we'll try to do a show next week. We can figure out where you really want this market to go. Like the higher and faster that this market goes up, like if the VIX really explodes and let's say it hits 50 bucks, your profit is going to start exponentially increasing as the VIX goes above and beyond that $50 level. Let me get a nice box here. And you can see 61.8's at the 61 point. That can't be right. That's just way too much of a coincidence. The 61.8 fib retracement is at 61.8. If that's not like, that's not destiny or like the weirdest coincidence I've ever seen. Do you see this, Jamie? Am I going nuts? Jamie's like, I've already finished 5 whiskeys. Are you there, sir? I think we lost. We lost Jamie. Oh, well. Well, sir, you let me know when you're... Oh, you're on mute. That's why. All right, maybe Jamie has found himself at the bottom of the bottle. But anyway, that's a pretty crazy number to be at here. I can't believe it. All right, so if this goes to 61.8 before October and happens relatively quickly and you get this expansion in volatility, and implied volatility as well, you benefit in multiple ways on this option. I mean, this thing could be worth a hell of a lot more than it is right now. And that would certainly be a cool play to get a credit on. I hear somebody. You okay there? Oh, there he had to go back and get his bottle.
Oh, sorry. Did you call me? Yeah, sorry. I went to get a couple more ice cubes.
I was just pointing out on my screen. Do you see the 61.8 retracement is at 61.8 on the VIX?
Is it? Well, maybe we'll go there then.
Isn't
Too ironic.
That's the word I was looking for, ironic. Thank you. Yeah, pretty crazy. All right, so that's the VIX. Let's go take a look at some of the shitty positions in the paper trading account. I really need to figure out a better way of doing this because to follow along here and, you know, just to at least have an account that's properly traded requires more than just looking at it once a week, especially the way that I play the market. There are some portfolios where, sure, you don't need to look at these things at all, but that's not the way that I play. We've got that UUP position here, which we put on 2 different ways. First, we bought the thing at $26.31. Then we also bought the $25 calls. We paid $1.35. They're worth $1.41 right now. And then we sold some $26 puts to pocket some premium. Remember I said last week, if you're going to do this, this is like triple the risk. It was just 3 different ways of playing the dollar to the upside because I really do like the dollar bull narrative right now. I think that with the riots coming to a, shall we call it a pause, I think that the risk exists that, not the risk, but I think the dollar now has the green light to go back up to at least retest this 98.63, so another full dollar higher here, 100 points, however you want to look at it. So let's take a look at the UUP and see where we're at. I mean, to get to the underside would be another 40 cents, and then I think 38.2 is just a little bit higher from there. I think that's logically the first step that we can anticipate these markets pausing. But, you know, again, if the Fed starts coming out and saying they're going to print more money and, you know, they're going to add more to the balance sheet, I think that's going to put a cap on this because the only reason why the dollar should have value is because it's scarce. Well, if they're making tons of dollars, there's no scarcity. So why should the dollar have any value? I could come up with some counter arguments because, it's a currency that everybody still uses, and it'll take time for people to lose their trust in the dollar because of the massive printing going on. But nonetheless, the writing's on the wall for that to happen. So I think in the short term, we will benefit from a dollar increase. So how's that going to affect things like gold? You can take a look here. I mean, even as the dollar is going up, it seems like gold is picking up steam as well. It's probably sniffing out some risk or something else going on in the market. I do think at the end of the day, what's going to happen is you're going to see the dollar and gold and stocks all rise at the same time. I've been looking for that to happen for many years. That idea came from Martin Armstrong, where he called it the massive melt up. Go check him out. He's got a really cool site and great blog. But here we are at gold. It really needs to break out. This thing's just been sideways consolidating. I could see more, the market continuing to move higher here. So I'm trying to take advantage of that through my own account, through things like mining stocks. Two of them that I was looking at are this Newmont Mining and Kirkland Lake are two. I bought calls on these things. You could, play the futures on the gold market, whatever you need to do to take advantage of the gold market continuing to go up. I'm a little, my conviction about this move here to the upside is more of for me, medium term. Most people medium term may be 6 months to a year. For me, medium term is like 3 months. So I'm looking for this market to at least make new highs here, assuming that gold does within the next few months here. I think that things are muddled. Things are kind of mixed right now. Can't really take a decisive stand on gold one way or the other until it breaks out up or down. So you kind of can draw your battle lines here at 1765 to the upside, and then down here at 1670. And just for the sake of making this really clear, let's put it down here at 1660. Any break above or below that is a sustained trend will dictate the movement of these markets going forward. So I'm going to be watching that very, very closely. Where did this go? I just lost my... Okay, so I'm not going to put those positions here on the paper trading account because I already have this GLD position that's actually expiring today, so never mind. Maybe, yeah, that was a big loser. Look at that. That's really great. We did this debit spread, I think. Okay, so that's going to roll off today for a loss. So what else? What can I play? Like Newmont actually seems better than Kirkland Lake right now. I mean, you could also play the gold miners through the gold miners, the GDX. That way you just get a bucket of a whole bunch of these. And I think I've been rambling for a long time. Yeah. Jamie, I'm going to have to shut up soon and let you take over. All right, so let's do this real quick. The GDX, if you want to play the bucket, you can do that. I'd be looking to buy something like the $35 calls, or if you prefer to get exposure to a specific one, I like Newmont. I would be buying the $60 calls, so let's go see what those are at and see if we can get a nice position for the next few months. Let's go to, I said 3 months, so let's go to September, check out Newmont, and see what the $60 calls. $60 calls are $370. It's not, you're buying yourself a lot of time, and with the upside potential, I kind of like this here. So let's just go ahead and buy these things. I'm going to put in, why is this so shitty right now? Okay, I'm going to put in 6 contracts. Let's make it 5. 5 contracts, make it almost 20,000, send. All right, so we've got this on until September, and we should benefit from any upside in the miners or the price of gold as this rolls off. Now this Edison position, that was like a long energy play. That's not doing too well today. It seems to be following along the same path as the S&P, and in fact, this looks like shit now. This needs to be, we need to cut our losses on this. So I'm gonna buy this back and just take the loss. I don't like the way this looks. Maybe we can reposition down around these lows. That gap looks like it needs to be filled, so going to take a look here. Gap corresponds to 78.6. I'm actually going to set a reminder or an alert here on TradingView so that I can actually go after this thing personally. How do I? Here we go. Right click, set reminder, set alert. This should pop up on my screen. Here we go. So crossing and then a gap fill to downside, look to play bullish reversal. And then this is open-ended, only once. I'm going to do crossing and then done. Create. So now I know when this is coming down there. The other thing that I was looking at was just energy in general. Actually, XOM was one that I played Exxon. That doesn't look as bad as that Edison. I wonder if all these energy plays are looking so crappy. The XLE, let's take a look at the bucket. Yeah, that doesn't look as bad. This is your Sino, Chevron doesn't look bad. Schlumberger, that actually looks good. That looks good. Valero, this is, that might just be the Edison name that I picked that did something wrong here. That looks like a double top too. So I'm going to be trying to stay away from that. Okay, so we dump that off and we are going to do one more thing. This is something that I'm playing personally. This is the not Shopify, sorry, Slack. I really liked Slack here. I had bought the $35 calls on this. Let's see if we can do the same thing here. I mean, right, so, you know, it depends on your narrative here. If you think that the market's going to dump, you really shouldn't be taking any long positions unless you're hedging out your short positions in your portfolio. This would be a way of balancing that out if you are like net short and you want to just make sure you have some exposure to the upside in case things melt up a little bit, or at least, you know, something like a Slack, which should theoretically be benefiting from everybody working at home, and maybe this isn't the hot thing anymore. I still use it and still like it, and technically I still like where this is at. So I'm going to go out to August and look at the $35 calls. These are 310 right now. How much would be 30? Yeah, I could see this being okay. I'm just going to stick this in the paper trading account. You should, yeah, 310. Let's just stick 10 of these. Now we got to do 6. 6 of these calls should put us around 2,000. Yeah. All right, so now we're long Slack, and then the other thing that I was looking at, this is actually something a friend was showing me. Yeah, this has already gone to new highs. I can't really play that. But what I am working on is Thinkorswim is a really great platform for screening things. You can add things like, you know, divergences, volume breakouts, unusual options activity. I want to start pumping out a bunch of names that are kind of at the bottom end of their ranges, play the smaller names. These bigger ones have already enjoyed a really crazy rally. Just want to see if I can scrape off a nice working list to pick a couple names that make sense to buy down around bottom ends of their ranges that haven't taken off yet. And just go through that once a day, have that running, maybe publish it, or we'll see what we can do with that. But those are the adjustments that I'm publishing in this paper trading account, or putting, yeah, so this new month, Starbucks rolls off next month. Let me just take a look at that. I really thought Starbucks was just going to dump. This thing has not really gone to the downside in the way that I anticipated yet, but we still have a month. You know, just like Apple decided to close its stores, Starbucks would come out and say, you know, we're done, we're closing everything down, even our drive-thrus, because our workers ended up getting sick. We could definitely see something like that. Okay, I am going to cut myself off here. You've heard me ramble for 40 minutes, Jesus. Jamie, tell me to shut up when I go this long. You're up, man. Let's see what's going on fundamentally speaking.
Hello.
Hi, you still there? Did I talk you to sleep?
No, absolutely not. Can you see my screen? Am I sharing?
I can.
I think
you're good now.
Okay, cool. Right. Yeah. Well, I think from my perspective, I think I'll roll it back a little bit. just to kind of go over the earlier in the week to try and explain why we had a rally over the last, well, to be honest, in the first half of the week, more or less. And one thing that really rallied the markets, which I was talking about, I wasn't talking about it, and I don't think I spoke about it when I did it on here, but maybe when I did it on TRI, was retail sales. So as we are coming out of this lockdown, I personally don't see us really coming out of it, as in like we're not going to lock back in. And with everything that's gone on, the one thing that everybody's looking for now to try and look for a confirmation to basically move up from where we are now is to see how the consumer is actually getting on. Now, retail sales came out, I think it was on Tuesday or Wednesday. Basically, when you had this large move up here, where are we? So, I mean, we were coming down Monday, Tuesday, and then when we came up, we literally just, we've basically gone up ever since, to be honest. And with the retail sales, they came out, I think it was, so as you can see here, I don't know how clear this is going to be. I'll see if I can zoom in a little bit more. So retail sales in general, they were up 17.7% month on month. The market rallied on this, which I was pretty surprised about. I mean, to be honest, the economy is Texas, for example, opened May the 1st. So this was one indicator. I tried to look for maybe more specific data just for Texas, but in general, it was really positive month on month. Now, this is what the news that everybody would have seen as it came out. And, you know, motor vehicle and parts up 44%, furniture 89.8%, clothing accessories, it was up 188%. So we can't really be surprised. I mean, you're comparing it month on month. Now, the market rallied something like 2.5% on this, which I found quite amazing. But really what we should be looking at is, in terms of, at least from my perspective, is really we should be saying, okay, well, what's the data looking like year on year? So, okay, month on month, it looks great. Don't get me wrong. And this is where you're going to get the volatility now in the data. So over the next, how many months, the data is going to be really volatile. You're seeing the ISM going above 50 because you're comparing basically month on month data. You're not really comparing year on year. A lot of the questions are to do with, okay, well, how are you compared to last month with employment, etc. And we're going to have bullish scenarios over the next few months, and then we're going to have bearish ones. So it's going to be really volatile. So personally, I'm looking more at the data that's coming out year on year. Now, if we look in year on year, okay, so year on year, we were actually down 6.1%. But I mean, going more into, going more into some of these more specifically, I mean, electronics still down 29.9. We've got gasoline stations down 30.8, not surprising. And I mean, even though we were up 188% month on month, we were still down 63.4% year on year. So if people think that, you know, buying the S&P at this price, would you really start munching on stocks? I mean, of course, some stocks are valued at different levels at this stage, but are you really going to, let's say if you're going to buy the S&P in general, are you really going to buy the S&P in general if you're going to have one part of the economy, clothing, down 60% year on year? It's just a little bit crazy to justify with the amount of uncertainties that we've got going on as well. And then food and services, drinking places, down 40%. Yeah, okay, up 30%. Month on month, but still, you know, you still have to look within the data. It's all well and good looking at the overall statistic, but you need to look within the reports to really get an understanding of the data in general. And I mean, I suppose the best one was non-store retailers. So they were up 9% month on month. I know they did really well. Did you order stuff online, Mini Bear? So and then year on year it was actually up 9.5%. So I suppose we can't really be surprised about that, simply because more people are now buying online because they have no other choice. So I thought this was a really interesting bit of data. I mean, as soon as I saw the markets rally, I found it quite funny. But I mean, this was the headline figure 17.7%. Yeah, it looks amazing. But overall, still down 6% year on year. It's still not great regardless. And I mean, some of the data in there is incredibly skewed. And I mean, compared to last year, I mean, we can see a lot of, you know, the clothing sector is down 40, 50% in general on some stocks. There probably is some value in a few of them, but you really need to do your fundamental analysis in order to really hone in on the right stock. And I think that's the way it is at the moment is, if you are going to invest in some stocks, you need to make sure you do the background work and really get into stocks that aren't overvalued in this time period. You need to look historically. So yeah, I mean, that moved the markets up. Everybody was going all happy, like, oh yeah, retail sales are up 17%. Yippee! So we went up. And then over the last few days, we are in that zone. Like you said, I mean, we've got this massive gap here. Whether we end up do fill that or not, I really don't know. But I think it's getting to a point now for the market in general is, okay, well, if consumers aren't going to be spending as much as they were pre-COVID, well, can we really justify buying some shares at specific prices? So this is getting to the point where these uncertainties are now starting to become a little bit, making people a little bit hesitant, at least the smart money hesitant, in a case of, well, if I'm going to buy the S&P here, I'm basically saying that, the stocks and companies are having the same results as what they were pre-COVID, which clearly isn't the case. It's not happening. So as Thomas said today about Apple, so Apple now are closing stores, which is the case for us, having a little bit of a down day today. Only down now 0.33%, a little bit better than what it was earlier. But I think this does have real implications. Now, I personally don't think we will go back into lockdown. I don't think that will happen at all. But if we compare this to the first wave, which is the only data we kind of have when it comes to viruses, Apple were one of the first retailers to actually shut up their shops. Well, so, one too many whiskeys, man. You should have let me go on first.
Sorry.
Now, yeah, no, it's no worries, man. I was just enjoying the whiskey, if I'm honest. So yeah, I mean, if we look at the Apple stores, they're going to close in, I think, 4 states in some specific ones. So we've got Florida, North Carolina, South Carolina, and Arizona. Now, okay, yeah, this is nothing for Apple in general. I mean, we have to remember that Apple will still continue to make money even if they lock down all their shops. Hence, one of the reasons why they've done very well in lockdown. Now, the question is whether other retailers will follow suit, because at the end of the day, nobody wants to be that shop that stays open and then spreads the virus. Nobody wants bad press. But then at the same time, we are now in that point where companies really do need to start making money, because if they don't, well, some companies are on the verge of bankruptcy if they don't start getting sales, ringing the bell, etc. So it is a really difficult one. I know, as you said, that you don't see anything happening. We might go sideways, and I agree with you up to some point. Now, I suppose which catalysts or uncertainties could move the stock market down? I mean, to move the stock market up, I suppose there's one simple one, and that is, well, the Fed. Make that money ring, like the brr. So, I mean, if that continues, which is looking like that's the way. I mean, every time when we've had a down day, like a significant down day, we've had the Fed coming out and saying, oh, we're going to do this. I mean, one point was, I think, sometime this week, and the Fed came out and said they're now going to not just buy credit ratings in general, but they're also now going to start buying corporate bonds individually. So looking at individual companies and buying the bonds that way, which is pretty significant. I think the amount allocated is $250 million. If I'm right or wrong, I can't really remember. It's more or less $250 million. So, that's another upway. I mean, they say they've got lots of tools, but the only tools to me is that they're just going to end up just printing money and buying debt. So that seems to be the only 2 tools that they have. Really, okay, so the S&P is where it is. Apple have just shut stores. If we look in terms of cases with with COVID, predominantly we want to be looking at the US. If we're just looking at the S&P, and we are now getting higher highs in terms of the daily cases. If we now go up, I still think the main catalyst is New York. If we do get a spike in cases in New York, And there is a significant difference here when it does move up. Let's say if it goes above 1,000 and then it goes up to 1.5, 2,000. At the moment, as you can see, it's pretty stable. So everything's all right when it comes to that front. But if we do get a case where it does go up, being New York being one of the main ones that was affected the worst in the US, then it wouldn't surprise me at all as if we do get a move down. Now, the Fed could respond and say, I don't know, we're going to buy everything. Who knows? They probably will. But in my view, there's more risk to the upside buying here than there is to the downside shorting here. Read that what you will. I mean, sideways is definitely plausible, simply because of everything, with the Fed coming out, and then they just keep on coming out and trying to give positive news. But, with the S&P here, with the uncertainty that is coming in, and we can't forget that, retail traders are making money at this point. Now, we have to take that into account in terms of a dumb money, smart money confidence. If you do look at a dumb money, smart money confidence index, the smart money is now getting quite cautious, and the dumb money is like very overconfident. So usually that can signal some sort of correction. Whether it does or not remains to be seen. With the VIX above 30 as well, that kind of gives a little bit of a headache for portfolio managers, because it's pretty difficult then to position, okay, well, where do we go now? So that is quite difficult for quite a lot. So yeah, in terms of that, with everything going on at the moment, I mean, just to keep it simple, it's more or less the same as what I said last week. Really, if we do want to see the S&P down here, if we are going to start seeing corrections, I can't see the tensions of the US and China really changing too much. I mean, the China have come out today and they've said that they're going to start buying in advance, accelerating the buying in terms of goods from the US. Okay, it's all good. Things changed. Trump came out and said that, we could decouple from China. So with everything going on with that, I don't really buy anything with the tensions between the US and China at the moment. But if we do start seeing shops close over the weekends and coming out just like Apple have, the main thing that we have to keep an eye on is the fact that now we are, where are we? We're on the 19th. So we're getting close to the end of the quarter. So that basically means that reports will be coming out. And if reports are bad from companies, then revisions have to be made. Now, if revisions have to be made, that means that the overall EPS, earnings per share for the S&P, will go down further. If that does happen and we start getting worse revisions, and let's say shops do close and it postpones for another quarter, well, they need to be priced in. So that, again, I'm not saying that the market will go down, but it gives more ammunition for the market to go down. So yeah, I mean, in general, that's what I'm looking at in terms of the overall markets. I'm quite interested to see what reports will come out over the next few weeks in terms of earnings. And then at the same time, I think on the 24th, we've got an IMF report coming out on the 24th, I think. Now, if those revisions are quite bad as well, that can sometimes lead to more negativity in the markets, and we could get a correction. Whether it'll be a big correction, I don't know. But I think that's one thing to definitely keep an eye on next week, is the IMF report that comes out. So that's more or less, to be honest, but is what I'm looking at. I mean, it's the same as before. You can't really justify buying here. I mean, there are obviously stocks that you could start nibbling on that are in good value in specific sectors. But in terms of buying the market here, buying S&P, I think that's probably the stupidest thing you can do, simply because of the uncertainties. Like the fact that you've got so many uncertainties still going on, you still don't know how consumers are going to spend. You still don't know what the unemployment numbers are truly going to be until the PPP actually changes. I mean, I think, when does it run out? Is it July the PPP changes? Do you know exactly? Or
the PPP runs out, well, it doesn't run out, but they stop accepting new applications the end of June. And I was actually reading today that Congress is proposing a new bill to have a second PPP.
Oh, okay. That would make more sense. I think, yeah, because they're trying to change it. Are they trying to change it because people now are thinking, well, I may as well stay unemployed because I'm getting paid more than when I was employed?
Yeah, there's like different ways of playing it. You know, the unemployment runs out. Well, you know, the one that definitely expires right now is the $600 benefit for unemployment. So depending on where you live in the country, different states give different maximum payments for unemployment. So in the state that
Okay.
I'm in, I think it's like 400 something. And you get that from the state, but with the CARES Act, you get an extra $600 on top of the 400 you would get from the state. So most people who are hourly workers, some of them would only be making, you know, a couple $100 a week. They end up taking about $100 in unemployment benefits from the state, and then they get $600 from the federal side. So they're making like, you know, sometimes 5 and 6 times more than they would normally make. But that runs out at the end of July, whereas the PPP runs out. Businesses can't apply for a new PPP after June 30th, but there's a new law that supposedly has to be signed to create a new account. And then they want to like increase the unemployment duration, maybe refund the whole thing. And it's just a mess. And nobody knows what the fuck to do is what it comes down to. But I see what you're saying, right? Like the more money that flows into these companies in the short term, is that going to help, you know, push money into the people's hands so that they can go out and buy, you know, go out and spend shit. But really, I don't know if you went over the figure and I don't have it, but it seems like most people ended up reducing their credit card balances. So you could see like consumer credit went, they diminished the balance that they were carrying on their credit cards over
Yeah.
time, as opposed to increasing the average that they would hold, which was interesting because there was evidently a whole bunch of free cash that no one could understand where that went, and it turns out it all went to the credit cards to pay down their balances.
Yeah, man. I mean, yeah, I mean, really, I mean, just buying the S&P here, like if we knew, for example, this was a recessionary period and we started seeing better numbers coming out when it came in terms of consumer spending, or actually knowing what the unemployment is, actually knowing about the virus, and you know whether, you know, if this does become a second wave or not, then yeah, sure, go crazy by the S&P. But you just can't. You just can't at these levels. I mean, with any uncertainties, so much can escalate so quickly. I mean, we've got so much going on. I mean, you've got the election at the end of the year as well, so that's going to be a big play over the next few months as things start heating up. So it's really difficult. But in terms of what you would do now, just wait. Honestly, I mean, until you start getting better certainties and understanding what's really going on and what's, you know, really get an understanding of whether consumers actually have a job or not, is when then you can really compare and see, okay, well, what figures are we actually dealing with here? How much are the companies really overvalued at this point, especially this late into a cycle? So there's too many variables to really get stuck in. So yeah, I mean that's the way I stand in terms of the market in general. Just wait it out. Let's see what happens over the weekend. Let's see if companies do start coming out and saying, you know what, we're also going to start, you know, closing our stores as well. We're not going to bother opening. I mean, at the end of the day, if you're going to be a store and you can more or less figure out that you're not going to make much money anyway, because if you're a consumer, are you really going to go straight back into the malls and start spending your money? I'm not too sure. I mean, the data's not too great for that, but yeah, I think it could be a great excuse as well for companies who don't necessarily need to open, and they just won't. And at the end of the day, you know, if you want to go and buy something, let's say you do want to buy something from Apple, are you really going to bother going into town to buy stuff if you know if Apple's open? So it is a difficult one. I still think again, New York, if New York opens and you know we don't get a spike up, then that's definitely going to help in general. But I mean, I think Florida today nearly got what 4K cases or something. So it's still uncertain. And then in terms of, shall we make a segue over to the BTC?
Let's talk Bitcoin. Why don't you tell us what you're seeing in the cryptos? The
Yeah, so I know
cryptos!
I annoyed quite a few people. I mean, obviously, I'm only going to speak about BTC, but um, yeah, I annoyed a few people where I was like, okay, well, these are the scenarios that I'm seeing. You're either going to have the S&P at the end of the day, the S&P, since the VIX has gone up now, you've got a very high correlation between BTC and the S&P again. So, if the S&P goes back towards its higher highs of where it was, then yeah, we could then test this long-term trend line. I mean, if I zoom out, I don't know how this is going to get on. Maybe I should put it into a weekly. So, I mean, this is a really long-term trend line. So, if we do go above higher highs, S&P basically did it here and then failed. So if we do it, okay, we may go there. But if the S&P goes down, which is what people didn't like, they didn't agree the fact that they genuinely thought that BTC will never go and see, 7 or 6K again. But, if the S&P then tests its, let's say, from a Fibonacci point of view, let's say if the S&P corrects at 38.2 or 50% level, then it wouldn't surprise me at all if we start to see us test the 50% level, since historically we have quite a good support and resistance here. So at the 50% level, that's the way I see it. If we actually go and test lower lows in terms of the S&P, then it wouldn't surprise me if we see 5.5 to 6K on the cards. And that's the way I'm looking at the moment. I'm not all bullish going, oh yeah, we're going to go and try and test this 14K and then we're going to go to 20K. I don't see that happening at all. I mean, even though we don't have much data on recessions and Bitcoin, I really can't see us going above, this trend line will be really difficult to break if we're still correlated to the S&P, which we are at the moment. So if we stay correlated to the S&P, unless the S&P then goes to higher highs, which personally I don't really see happening. I don't know how for some reason, but I can't see happening if the virus cases keep going up. Then, yeah, we're more likely to go and test lower levels. So if you're going to buy Bitcoin, personally, I would just wait here. There really is no rush. I would wait. I think you've got more chance of buying at either 7K or even 5.5K than you have if it breaks out. Let's say if it breaks out over the next week, for example, and it goes above this and it closes above, I'd still wait, because while we still have uncertainties in the markets in general, and the Bitcoin still correlates to the S&P, then anything can still happen. So it's just not worth the risk. But yeah, that's me on the crypto front, sir. I don't really follow anything else, so I suppose I'll hand it back over to you.
Thank you. I mean, I can't disagree with what you've said, and I think you're spot on with everything when it comes to this market. It's heavily correlated to the S&P. The only thing that I can disagree with you is the S&P not making new highs. I think, there was a funny...
Never!
Right, it's wild, but I retweeted this because I think it's hilarious and it's horrifyingly true. This guy, where is it? God, I talk too much.
I'm surprised if I even made any sense then. I'm gone. I am gone.
Robinhood traders can remain irrational longer than hedge funds can remain solvent. That goes along with, right?
I love it.
I think that's what we're seeing, and we're going to see more and more of this crazy. The market just likes to make as many people look stupid as it possibly can. And there's so many people that are just coming out and saying, the market can't make higher highs, and it did. And then the virus, look, what it comes down to is whatever the consensus view is, the opposite's going to happen. And I think right now a lot of people are thinking that the market's going to just dump because things look like shit. And while it could dump next week, I already said what I did about stocks. I think that the take-home message from Jamie is that they're correlated to stocks, crypto is correlated to stocks. Bitcoin here, I think you did a great job. Is this thing going to 20 grand tomorrow? Absolutely not. I mean, I think this looks really, really weak. In fact, it looks weaker than the S&P does, and that leads me to get a little concerned. We're kind of losing this trend line to the upside over the last 2 days. I think the next trend line is down here, so that's like 8,700. I tweeted out that I could see 8,600. I definitely think that's on the table. and then you lose this 8,000, or you lose that 8,600 level, you're probably going back down to retest this breakout level of like 7,500. Going for... All right. Jamie's taking a bathroom break. Anyway, I just don't really see... I see more sideways is what I see. I see the S&P, I see the broader markets, I see those not really in the same, bearish scenario that everybody else sees, but I also don't see the crazy bullish scenario. I think there's going to have to be some sideways action here. I think that the same problem here with Bitcoin exists in the S&P, that you're in this trading range, like break above to new highs, break below to new lows in this range, and then we can start talking about range trades. But right now, this is one of the hardest things to trade, is when you're stuck in between these two levels. Now, granted, we do have a nice trading range of $1,500 in here. So trades on the daily aren't necessarily on the table, but the lower time frame trades you could certainly take. For instance, I'm trading Ethereum, you guys know that already, but for Bitcoin, right now, when it comes to taking short-term swing trades, taking a low to the high, we just bounced off the 50% level. It seems like Bitcoin is rallying back up just as the S&P is into the close here. You can see we're coming off the lows of the day. Boom, right back up, and then you can see Bitcoin on the hourly, same exact thing, boom, coming right back up. But you are getting lower highs and this continual sideways downward trend. Look, you can just draw a nice trend line from, call it here to, where's this thing? Here we go. So I would take a trend line from even here to here. And if we can break above this yellow line here that I've got, then fine, maybe we can get some upward momentum back up and maybe eat this candle wick up here at 95, 9600. But for now, we're just resolving 38.2 on this most recent trend. And to me, it looks like it's trying to resolve itself to the, actually it hasn't decided yet, but we have to wait and see how that comes out. But I think into the weekend, we have to go back down into this 9100. Is that worth a trade? I don't know, $150. I guess 170 to 180 bucks to the downside. 5x leverage on, something like Kraken. You might be able to scalp a couple percent off that and make some money. But, weekend trading, I keep saying it sucks. It's really not that good for taking these trades, just because the sideways action and the fees that you incur on it, it's just not fun. But, I think you've got trading ranges. I think we're going to see, the other thing that I saw, which was interesting, we talked about gamma pins and expirations. Deribit is talking about a historic $1 billion options expiration next week. So maybe that's why we're seeing the price of Bitcoin and all the other, bigger names being stuck in a trading range that's very tight. We might be seeing the same phenomenon that exists in the broader equity market being applied here to Bitcoin, which is in between two pins, the market gets stuck because of that options expiration. So let's take a look at skew and see, where are we seeing the most options activity. We have realized volatility, the call bid. That's the option skew. That's not going to help us. Here's the option volume. So here are the contracts going into the 26th. There's a ton of interest at the $8,000 puts, and also a ton more interest at the $1,100 calls. This isn't going to look like it's specific enough for us to find out where those two levels that the price is pinned at. Like right here, we've got options changed on the daily. Can I change this at all? No. Yeah, we've been trying to get an institutional account here and they just don't even answer back. I'm too much of a small fish. The June 20th, $9,500 calls. There's 267 contracts on that today. That's a change. Open interest, maybe this is going to be helpful. This is by strike. Maybe this is the June expiration. So you can see it's not that many contracts. Here's another one, 26 open interest by expiration. No, so it's hard to easily see this on this site. I don't have access to the data to be able to figure out where it's pinned between, but you can pretty much see that just from the chart. It looks like it's between 9,500 and probably, call it 8,800 or 9,000 is where this thing's going to end up when it goes into expiration. So I think that's a good driver to understand. Let's see, when does this thing expire? June 26. Yeah, so that's next Friday. So maybe we won't see anything happen in crypto until after next Friday when everyone takes their positions all over again. So until then, maybe it just makes sense to be hands off, let this market resolve itself, because there's really no use trading through sideways chop. Now, with that being said, I can't help myself. I took a short on Ethereum. I've had this short on for a while. I actually put the short on, I think the beginning of the week, maybe Monday or Tuesday, and then into either Tuesday morning or Wednesday morning. It looks like it was Wednesday morning. This wick here stopped me out of my position. And this is an hourly candle. This was right into the New York Open. I was really pissed off watching it happen. And I was like, you know what? I'm taking the position again because this is such an obvious FU move that they fucked over all the stops. And I put the thing back on at the 236 area. So I've been short from 236 and my target's been the 61.8. I got really close last night, but still didn't hit it. I'm still profitable, very profitable on this position actually, but heading into the weekend and the close, I'm waiting for one more dump because this is really interesting. If you look at the 4 p.m., 3 to 4 p.m. level, it looks like things start to sell off and then they reverse. So here was 3 p.m. on Wednesday, nice sharp sell off, put a nice tail down and then got bought up into the 4 or 5 o'clock hour. Then into the overnight, it starts drifting again. They try to wash the stops again, but they couldn't. My stop was set right above this area, so I did not get washed. Sold off into last night and then into this morning, same thing. Tried to wash the stops, but couldn't bring it to new highs. So that to me means there's still shorting interest. And then look at this, 3 o'clock. 3 o'clock's right now, so we're kind of changing the trend. Maybe we could get this thing to sell off into the close. I may end up selling this off if we get one more move. If we don't make new lows, I'm taking this position off because I think the same phenomenon in Bitcoin is being applied to Ethereum. I don't know about the Ethereum's options expiration, but I was really hoping we get that sell-off into the low 220s, but I'm losing my conviction for that, and I really don't want to be carrying this position into the weekend. The 4-hour chart looks bearish. It continues to make lower highs. The 200-period moving average acted as support a couple of times here. So I think the trading range is narrowing before we make a decisive move one way or the other. So that's what I'm doing. I'm happy to take this, again, position off and wait until next week or a resolution of some of these positions going forward, or some of these trading ranges going forward. Let me just bring up, there's like one more story that I wanted to talk about, which was evidently a bunch of these DeFi names are doing quite well. You've got your Gnosis, a couple of other names that I've never actually traded before, but there's let me make this full screen. Yeah, Gnosis gained 10%, Augur is up 7%, Bancor is up, even though they had a bug. It's all these DeFi names that seem to be doing pretty well. I think it's a bunch of people who are very, very crypto-oriented, very intelligent with their money, and understand that keeping money in the bank is a bad idea, and therefore they're moving it into this DeFi. I can't think of the word right now, but basically this is probably what's happening here. Next, we talked about the options expiration. I was just trying to scan this thing just to see what kind of news is coming out, but I'm not really seeing anything decisive. Again, it's the same thing. I think a lot of people took positions in Bitcoin just like they did in gold. And Bitcoin and gold look very similar too, just kind of sideways consolidation. Here's again your Bitcoin, Ethereum, S&P correlation. It actually looks like S&P futures are trying to poke up while Bitcoin and Ethereum are on their way down. And then that's pretty much it. Like, I'm not trading. I actually sold all of my Schalt coins maybe early last week or mid last week, whatever it was. I haven't taken any new positions. I can just go through the list pretty quickly here. And look, everything kind of looks the same. Litecoin, Bitcoin Cash. Oh, and then there was this one last thing, this Craig Wright Mt. Gox thing. This was hilarious. So I am a Mt. Gox creditor, lost a sizable chunk of Bitcoin in Mt. Gox. I've since learned my lesson not to keep all of my coins on one exchange, or at least not your keys, not your coin scenario. Keep some on in my own possession. But it came out that Craig Wright is, he's being sued in court, and evidently he controls a bunch of Bitcoin because he wants to prove that he's Satoshi. And in the case, in the court, they asked him to prove that he was Satoshi by handing over wallet addresses that would prove, and in trying to prove that he was Satoshi, one of the wallet addresses that he handed over that he said he had control of was one of the old Mt. Gox addresses that some stolen coins were residing in. So now people are accusing Craig Wright of being one of the hackers behind the Mt. Gox hack. And really what I think it is that the original 2011 hack, where Jed McCaleb ended up transferring some coins, that there may have been some fuckery involved where maybe Craig Wright was the guy who bought it or was part of the scheme. Whatever it is, that seems to be what's going on here. And now all the Mt. Gox creditors are thinking that they can sue Craig Wright. So he just loves getting himself into deeper and deeper shit. It's never a dull moment here in crypto. Anyway, let me see. Maybe there's a couple of other names to run through here. There's your EOS, same problem. I mean, all these charts just look so similar. In fact, they're all almost carbon copies with the exception of Tezos. Tezos seems to be sticking up for itself quite well. Ethereum Classic is breaking out. That's interesting, but it's already overbought, forming a bear divergence. I cannot play this. Oh, you're seeing Jamie's chat on my screen. Jamie, are you still here, or did you fall in the bathroom? Fall into the toilet there, buddy.
Didn't need a number 2. Went for a number 1. So
Good. I'm glad. Otherwise, I'd ask you some weird. Look at this. So REP is continuing to move higher. I can't believe ZRX has held on to the levels that it's at. OMG.
So the big question I want to ask you is it alt season, sir? Much moon?
No.
Is that happening?
No.
No.
No, not yet. I think we're going to have to wait. I mean, anyone who thinks alt season is happening is wishful thinking. You can use whatever barometers you'd like to use, but I'm sorry, the capital is just not going to be flowing into those. Maybe the DeFi names, maybe, a couple of other ones that have actual use cases. It's the usual story. Don't get excited about your shit coins, because they are just that. And the real money that used to be flowing in. The Robinhood traders from present day were actually the old shitcoin traders of 2016, 17, and 18. So be careful with that. But anyway, that's pretty much what I've got to say. It was a lot, and hopefully it made sense and was useful. Feel free to chime in anytime. I'm happy to look at whatever it is. But that's your Bitcoin, altcoin, stonks roundup. Stay tuned for... I'm going away next week. I don't know if I'll be able to stream from my laptop. I guess we can try.
No, we'll be back in a couple of weeks. We'll let them be thirsty for more.
Oh, yeah? I think
And
people, What's that?
Go on, sorry.
I was just going to say the 4 people that watch us may forget about who we are.
Well, the 4 people that watch us, just comment below on what stonks or crypto you want us to look at. Look at me being cool using stonks.
Yeah.
Comment below what you want, and maybe we'll look at them the next time we do a stream, and we'll let you know whether it's complete utter dog shit or whether it's worth a look.
Yeah, and if it's a shit coin, it's definitely a dog shit, so you don't even have to ask. If you want, we can say it on air for you. It's like, no, do not buy, whatever the shit coin of choice is these days.
But sir, it's better than Bitcoin.
Yeah, right. All right. I think I'm done, man. I'm all talked out. I got some shit to take care of, too. This was fun. I always enjoy having this Friday discussion with you. It's nice to hear the virus is going to ruin the economy speak from you. No offense, buddy. I still love it.
No, it's fine. It's fine. But
I'm on board for that too. It's just, it doesn't seem to be what the market gives a shit about right now.
No, of course not. All the market gives a shit about is the amount that money's being pumped by the central banks. That's all they give a fuck about.
Yeah.
But yeah, it's all just waiting for that catalyst that people are just like, you know what, fuck this. And they just end up just having to sell their positions if that happens. So yeah, you're right. Like sideways is on the cards maybe for the next couple of months, unless we have some crazy catalyst that moves the markets down. That's probably the best way to finish it on.
Yeah, sounds good. All right. Well, I'm going to try for next week. If you don't want to, that's fine too. But maybe I'll even drink next week. I ordered a case and a half of wine for this place in Cape Cod, and I've got my brother-in-law who's bringing two cases of beer, and I'm bringing beer from here in addition to the wine that I ordered. It's going to be maddening. I'm definitely going to be joining you next week for a drink if we can get this running.
You know what? I think we should I think we should reverse our role play.
No way.
It's like I didn't even know what I'm saying half of the time. I'm too far gone by the end of this podcast. It goes on for 2 hours. 2 hours of drinking by yourself. You get wrecked.
We need to do a drinking game. Every time we say virus, we got to take a drink. Or that, or money printing, or Fed, or sideways, sell off, Robinhood. We could have all these keywords.
Anything negative, you have to drink a shot.
Shit coins.
You have to do it. Why is it Dave Portnoy way? You have to stocks only go up. Stocks only go up.
Yeah.
So anything negative, you have to have a shot.
That's a good idea. I think we should add like a bonus shotgun of beer if you say something like shit coins or something that's a little more rare for us to mention, but it's still a keyword like China. Which we could really get off on China because we didn't say that once this whole podcast, I don't think.
Yeah, it's just a bit of whiff waffle at the moment, isn't it? It's just like, oh, you're nasty. No, you're nasty. Like the market isn't pricing it, and I think they just like, yeah, whatever. Like it doesn't really matter too much, to be honest.
Yeah. All right, let's call it a day, buddy.
Yes, let's finish this.
All right, everyone. Thanks for tuning in.
Darren won't forget us. I won't miss you too either, Darren.
What?
I just saw a YouTube comment. Darren loves you.
Thanks, Darren. We love you.
Thanks, Darren. Well, this is to Darren.
Our number one fan. All right.
Yeah. Carijo as well.
All right, everyone. Thanks for tuning in. Until next week, if we do get this going, you're going to have like a 7-hour show with me drinking and being fucked up. Because the last time I did a show where I had whiskey, or scotch it was.
Yeah,
I think we did like a 3.5-hour show or something.
Oh, fuck, man.
All right, man. Have a good weekend. I hope you have a great trading week next week. If anything cool comes in, let me know. I'm around. I'm happy to chat. I'm going to be more chill next time, too.
Yeah, let's do it. All right. Take care, guys.
Thanks, everyone. Take it easy. Have a great week. Bye.
Peace.